want to talk about another finance topic we all love to avoid: student loans. But a student loan, regardless of how hard you try to ignore it, will not go away even if you move country, and I was still required to repay my English student loan even though I was living in Australia. So I am going to specifically be talking about Australian student loans from the perspective of a sole trader and the repayment of those and kind of how that process works. So the tax office, the ATO, assess your student loan repayment when you submit your annual tax return. So they take your income and then they see if you're over the threshold, and if you are over the threshold, they then apply the repayment in addition to the income tax that you owe. So they will then, you'll have two amounts to repay, but it kind of looks like one amount because you'll get kind of this total bill. If you have been working and you're getting a refund, they will use that refund to offset anything that you may owe for a student loan sort of thing. So what's the threshold? The threshold is $45,887, and at that rate you pay 1% of income towards your student loan. The first bracket, and all the brackets are kind of about $5,000, and it is a sliding scale, so 1%, 2%, 2.5%, etc., all the way up to 10% for if your income is 134,000, I think it is, something around that. But from a sole trader's perspective, we have to remember that's based on profit, not on income, because our income as a person of a sole trader business is the profit that that business makes. So if your income is 50,000 and you're spending 30% of that on expenses, you are not going to be required by the ATO to make a repayment towards your student loan. If you're earning 75,000 with 30% expenses, then you're going to be at like 52,000, so you would be required then to make a mandatory repayment. Now, unlike superannuation, if you make payments throughout the year, so incremental payments, these won't count towards your annual total. So these kind of deemed by the ATO to be voluntary repayments. So they're above any amount you would be required to pay by the ATO. So it doesn't actually make sense for us to be doing that if we're going to be making a payment to the ATO at the end of the financial year when we do our tax return. So my suggestion would be to save this into an account and then pay when you're required to pay, rather than necessarily making voluntary. Like if you can afford it then and you want to pay student loan, go ahead, make voluntary repayments. It makes complete sense sometimes to clear that debt. So my advice: save and wait. So how much are we going to talk about saving? Well, the first thing is to remember, so incorporate it into your personal tax return. So what I would suggest is coming up with an amount for your tax, your super, please add something in for super, and your potential student loan, so that you're saving a particular percentage of that into an account. And to come to that figure, we would first need to estimate what your total income will be for the year from your business, any other income sources you have as well. So don't forget, if you have investments with dividends or property or shares, that sort of thing, those will count towards your personal income total. And then we would obviously look at what the business's expenses are, so we can estimate what the profit from the business will be. Then take that figure and refer back to the tax tables to figure out what your marginal tax rate will be. Now, there's a lot of talk about the first bracket where you start paying tax, $18,200, and it's not quite right, because there are a couple of offsets that can actually increase that limit up to just over $21,500. So that the low income tax offset, LITO, and the low and middle earners income tax offset, LAMITO, something like that. So there are offsets that can actually raise that from 18,000 to more like 21. So there's not necessarily a strict thing. There are actually more bands in there than the ATO necessarily make available, because it's quite complicated and tax offsets are quite complicated. But we do want to put an estimate in. So if we estimate that, 10% is going to become taxable income, we're going to pay 10% tax on your income, on your profit, then add something in for super, add something in for student loans. So maybe you're looking at 1%, maybe looking at 2%. And then also I'd suggest just add in a little bit of contingency if you can afford to do so. So you've got a little bit of a buffer in your account should something go really well in June, which is what I wish for everybody. So then once you've worked out that percentage of tax that you would be required to pay, tax, super and student loan, I suggest to make it a percentage of the income you're expecting, because it's much easier to see, oh, that's 12% of income that I need to save, then that's 27% of expenses, because your expenses are quite variable, as is your income. But if you see a regular income coming in, you can say, okay, from that I need to save 12%, squirrel that away into a separate account, and you should hopefully be covered for income tax expense, superannuation and student loans. Hope this video has been useful. If it has, please leave me a comment if you have any questions, and otherwise I'll see you in the next video.